Hello, hello, and welcome to Elshaddai's Life Team Study Session. Hope everyone is doing well today, and I'm here to hopefully get someone excited about getting ready to go and take your state exam. And we're going to go over the study guide. Wanted to give you all an audio version of what we've been going through over the last several chapters. And so I began again. Thanks again for everybody who's joined Team Elshaddai. I want to say thank you on behalf of my husband and myself. We do appreciate you all joining our team. So first things first, we're going to talk about general life insurance. General life insurance. So let's talk about when you get ready to take the state exam, the Alabama state exam. So first thing first, you want to read each question at least 3 times before selecting an answer. Read each question at least 3 times before selecting an answer. And then you want to read all 4 answer choices before selecting the correct one. Read all 4 answers. The test is designed to deceive you. It's designed for you to see that little catchy word and say, oh, I know that's it. I remember that. But you want to make sure you read all 4 answer choices, okay? Now, watch out for words such as not and accept. Not and accept. Look for those words in your question, not and accept. It will make the difference of what the answer would be. So pay attention to not and accept. Do not change your answers unless you see the answer in another question. You remember the answer from another question. Do not change your answers. If you're stumped on a question, mark it, keep moving. Don't waste time on something that you can't remember. If you don't understand and if you don't know the answer, mark it and come back to it if there's time at the end. All right, next, use the process of elimination. Use the process of elimination. Go ahead and get rid of 2 wrong answers. Look at those answer choices. Study them and say, this don't have anything to do with anything. That don't have anything to do with anything. That narrows your choice down to 2. Pick that right answer and keep it moving. All right. So the purpose of insurance, dealing with risk, the law of large numbers, types of insurance companies, domestic, foreign, alien, admitted, non-admitted companies. Want to talk about all of that. Dealing with risk. The world of insurance begins with one word. What's that word? Risk. Risk. What is risk? Risk is the uncertainty of loss. Risk is the uncertainty of loss. The fact that something could go wrong that would cost money. That's what risk is. What is risk? Risk is the uncertainty of loss. The fact that something can go wrong at any time that will cost money. Now, insurance transfers the risk from an individual or corporation to the insurance company. Insurance transfers the risk from an individual or corporation to the insurance company. Fair enough? All right. Life insurance. What should I know? Life insurance is a way of spreading the cost associated with a person's possible premature death amongst many people so that it won't overwhelm one person. That's what life insurance is. It is a way to spread the cost of someone's possible premature death from one person amongst many, so not to overwhelm one person. Isn't that sounds fair, right? Life insurance is based on an imaginary person who dies at age 100. Life insurance is based on an imaginary person that dies at age 100. The law of large numbers. By studying millions of deaths over many decades, it is possible to predict accurately how many people die in each year within age groups. Law of large numbers. What is the law of large numbers? The law of large numbers. It is studying millions of deaths over many decades, and you can predict accurately How many people will die within that year's time in an age group? A life insurance policy creates an immediate estate upon death. What? Life insurance creates an immediate estate upon death. The money immediately becomes real upon the death. Life insurance creates an immediate estate. Insurance, what should I know? Needs for cash at death. You know, you need cash when you're living, and unfortunately, there's cash needed when we pass. What are some of those needs? Final expenses, burial expenses, medical expenses, plus debt and current bills. All of these things still live even after we die. Debt repayment, credit cards, car loans, right? Okay, home assurance, need to pay off the mortgage. Recently, we learned of someone who said that Jesus was their insurance. And I'm going to have to stand and correct that and say, no, Jesus is your assurance. You still need insurance. Final expenses, you're going to need cash for that. Okay, home assurance, need to pay off the mortgage, education fund, children, education needs for spouse and children, right? Emergency funds, a sum of money to be used for unexpected expenses, at least 6 months. That should be a goal for every human being, is to have an emergency fund, at least 6 months worth of emergency funds stored up. Okay, continuing income replacement of deceased spouse. Okay, human life value, add up income to age 65. Okay, so when you continue income replacement of the deceased spouse, human life value, you add up the income to the age 65. For example, 35-year-old, $100,000 a year, right? Okay, $100,000 times 30 years equals $300,000 at age 65. So that is supposed to be predicting to you how much will be needed at that time. Insurance, what should I know? Types of insurance companies: stock, owned by stockholders; mutual companies, owned by policyholders; fraternal benefit societies, they are mutual companies. They're set up on a large scale, cannot issue stock. They sell insurance only to their members. Okay, let's keep this in mind. Stock, owned by stockholders; mutual, owned by policyholders; fraternal, their members. It's easy. Stock, the company is owned by the stockholders; mutual, the company is owned by policyholders; and fraternal, they sell amongst their members. That's easy. We're not even going to meditate on that. Insurance, what should I know? Where is the insurance company's home office? Where is the insurance home office, right? The answer to that question will be determined whether it is domestic, foreign, or alien. Domestic is a home office located in the same state. Foreign, hey, wait a minute, are you from here? Home office located in state. That's what foreign means. Okay, alien. Aliens come from outer space. Alien mean outside of the US. Okay, so where is the company's home office? It's going to depend on if it is domestic, foreign, or alien. Example, we live here in Alabama, so our home office is in Atlanta, so that makes us have a foreign home office because it is in another state. If it was outside of the US, then it would be an alien company. Make sense? All right. Insurance companies are either authorized or unauthorized. Authorized or unauthorized, it speaks for itself, right? Okay, authorized or admitted or authorized, used interchangeably, approved by the insurance commissioner. That's all that means. An insurance company is approved by the insurance commissioner to operate within the state. That's what an authorized company is. That's what an admitted company is. Unauthorized, The opposite. Not approved by the insurance commissioner to operate within the state, but can operate as a surplus line. Easy enough. Authorized, got permission from the commissioner. Unauthorized, you don't have permission from the commissioner. Okay. Now, let's talk about Lloyd's Association. Lloyd's Association. Believe it or not, this is on the test. Association that underwrites each other risk, but they're not an insurance company. Example, Lloyd's of London. Lloyd's of London. Okay, Lloyd's Association. All right. So they underwrite each other's risk, but they are not an insurance company. Just remember that. Lloyd's Association, they write each other's risk, but they're not an insurance company. Okay. What about a surplus line? Surplus line companies or brokers that are allowed to operate in Alabama, but they must have a 50,000 bond. Surplus line, 50,000 bond. Surplus line, 50,000 bond. Surplus line, 50,000 bond in the state of Alabama. Got to have a bond, surplus line, right? All right. Rating organization. They grade companies. Include AM Best, Moody's, Fitch, and S&P. The ratings from not rated to rated AA. Okay. What about reserve? Reserve is an amount of money set aside by law to pay future claims. What? Reserve. It's an amount of money set aside to pay future claims. Okay. All right. Contract law. Introduction to the law of contract. Contractual terms and concepts. Law of agency. Power of power. Let's see what we're talking about here. Now, elements of a legal contract. What are the elements of a legal contract? Elements of a legal contract. What are the elements of a legal contract? Okay. Competent parties. Yes. A person must be of a sound mind, of a legal age in order to enter into a contract. What you say, I'm going to say it again. A person must be of a sound mind and of legal age to enter into a contract. The age in Alabama is 15. Okay, competent parties. Elements of a legal contract. Element number 1, you must be competent. That means you must have a sound mind. And you must be of a legal age to enter into a contract. That legal age in the state of Alabama is what? 15. Okay. What are some other elements of a legal contract? Legal purpose. What? Yes. The law can only enforce a contract if it is for a legal purpose. Can't do it for some funny stuff. You can't do it for some weird, illegal stuff. It's got to have a legal purpose. Elements of a legal contract. Competent party must be for a legal purpose. Come on now, think about that. Offer and acceptance. These are elements of a legal contract. Offer and acceptance. What is that? When we send in our application for coverage, we are submitting an offer. When the company issues the policy, they have accepted our offer. Offer and acceptance. That's the third element of a legal contract. Competent party, legal purpose, offer and acceptance. You're not going to forget that. Offer and acceptance. You submit your offer when you send the application, when the company issues the policy. Hey, we just accepted your offer. You're not going to forget that. Competent parties, sound mind, legal age, 15. Sound mind, legal age 15. Sound mind, legal age 15. You're going to remember that. Legal persons. Come on, legal purpose. It's for itself. Consideration, something of value. In the case of life insurance contract, consideration is money. So when you see the word consideration, it's referencing money in insurance. All right. Insurance. What should I know? Words that remind us that insurance contracts are strange. What are some words that remind us that insurance contracts are strange? First, aleatory. The money is not equal. Aleatory, the money is not equal. The insurance company and the policy owner do not pay the same amount of money in the contract. Aleatory, 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 unequal. The company, the policy owner does not pay the same amount. Unequal, aleatory, unequal. You're not going to forget that. Contract of adhesion. Stick. What does adhesive do? Stick. Contract of adhesion. Stick. The policy is written by the insurance company and presented to the customer to stick to, adhere to, right? The company had more to say, so therefore the customer has to what? They got a 10-day free look. They have a 10-day free look. And after that, you have to stick to what is written. Contract of adhesion. These are terms that remind us that insurance contracts are strange, okay? Unilateral aspect of insurance. Only the insurance company is bound by the insurance contract. Unilateral, one aspect of insurance. Only the insurance company is bound to the insurance contract. The insurer may choose to pay the premiums or not at any time. Unilateral aspect of insurance is saying only one person is bound, and that's the insurance company, right? See, the insurance company can't jump out of it and go the other way and say, hey, you know what? I thought about it. No, but we can. We say, I'm not feeling this premium anymore. But we don't want to do that because we don't need insurance until we need it, right? All right, insurance. What should I know? Other contract terms. We just talked about terms that lets us know that insurance contracts are strange, like aleatory, right? That's one of the things that let us know that insurance policies are strange. That is going back to the money not being equal, then the contract of adhesion, then the unilateral, okay? Contract of adhesion, you got to stick to what's written, right? We're going to remember that. Aleatory, the money is unequal. The company and the policy owner don't pay the same amount of money, right? Unilateral, only one person is bound to the contract. Insurance, what should I know? Other contract terms, parole evidence rule. The written contract represent everything that was said. Parole. Listen. Okay, parole officer, right? All right, Johnny got in trouble. Johnny went to jail. Johnny got out of jail, but Johnny is on parole, or they may have a probation officer. The probation officer is there to help enforce what was said by the law, okay? Parole evidence rule. The written contract represents everything that was said, okay? Contract of utmost good faith. Faith. Contract of utmost good faith. Each party has a duty to disclose everything that is important to the contract. Contract of utmost good faith. All right? Each party has a duty to disclose everything that is important to the contract. Estoppel. Prevented from asserting a right. Estoppel. Prevented from asserting a right. The company started to pay for benefit that it did not have to pay. So now it must continue to pay. Okay? Conditional contract. Conditional contract. Both the insurance company and the policy owner have responsibility. It's conditional. Both parties have a responsibility, okay? Both parties have a responsibility. Mortality rate is based on the law of large numbers. Many lives over many years. Don't forget that. The law of large numbers is dealing with the fact that you can study millions of deaths over the course of time, and you can determine accurately how many people would die within that time frame in a certain age group. The law of large numbers. Mortality rate. That's another word for a lot of large numbers. Effect of aging. What are the effects of aging? The effects of aging is the true cost of insurance increases each year. Everyone is statistically dead at age 100. When you're in the field and you're working your business, you're going to run into Sally, and Sally's going to say, well, I don't want y'all type of insurance because y'all insurance go up at the end of the term. Honey, tissue goes up at the end of each year. Everything goes up at the end each year. Everything goes up every year. So the price of insurance, yes, it does go up every year. Okay? So just remember that. Insurance, what should I know? Producer's authority. Okay, producer's authority. What is a producer's authority? Expressed authority, we're going to deal with 3. Expressed, right? Authority that is clearly expressed, clearly, usually in writing. Expressed authority, usually in writing. Expressed clearly, usually in writing. Expressed authority. Implied. You ever heard somebody say, what are you implying? What are you trying to say? Implied authority. Authority that is not specified in the agency agreement, but common knowledge. Okay, it's not specified, but it's common knowledge. Implied authority. You need to know the difference between those 3 authorities: express, implied, and then apparent. Apparent authority. Apparent. Well, it's apparent to me that yes, apparent authority that is a reasonable person. See that? You ever heard that sentence? Well, honey, that was quite apparent. Clear. Apparent authority that a reasonable person would assume exists, even though it doesn't. This can still legally bind the company. Okay? Apparent. 3 types of authority we talked about: express, in writing; implied, not specified; apparent, even though it's not written, it still can bind the company. Reasonable, if a reasonable person would assume that it exists. Insurance, what should I know? Agent's responsibilities during a claim. You need to know this. What are your responsibilities during a claim? Well, what are you talking about during a claim? I'm talking about your client just gave you a call and said that their loved one passed away. What is your responsibilities? First and foremost, the agent first action is to notify the company. Contact the company on the client's behalf, or the company can contact themselves, but these are your responsibilities. Other responsibilities include contract beneficiaries. Okay? The beneficiaries, they need to be, that contract is enforced, they need to be contacted. Complete paperwork. Okay? Cooperate with representatives in other companies and help the beneficiary choose settlement options. Underwriting and the application. I want you to listen to this over and over until you know it. If I ask you any question, you will know it. Underwriting, risk classifications, premium classification, mortality risk factors, premium mode, conditional risk receipt, agent responsibility, insurance marketing system. Insurance, what should I know? Risk selection process. What is the risk selection process? Remember, the world of insurance deal with one word, and that word is what? Risk. What is risk? The uncertainty of loss, something that could go wrong that would cost money. What does insurance do? Insurance is a way of taking that responsibility off of one person, spread it out amongst many, so one person will not be overwhelmed. Now, what is the process? What is the risk selection process? Underwriting. Underwriting. In order to get insurance, you have to go through underwriting. The underwriting biggest step, the biggest source of underwriting is the application itself. Underwriting. Underwriting. When you hear the word underwriting, it's referring to the application and everything concerning this person's personal life. Okay. The application. formal, what is that? The formal request to the company for a life insurance policy. An application is a formal request to the company for a life insurance policy. Underwriting, the biggest source of underwriting is the application. What is the application? The formal request to the company for life insurance, right? Medical Information Bureau. Medical Information Bureau. What's that? It's probably got medical information in it. Medical Information Bureau. Yep. Medical Information Bureau is a nonprofit agency by life insurance companies to aid in their underwriting. So life insurance companies can go through the MIB to find out what kind of pills I'm taking, what kind of diagnosis I have, supplies, member companies with insurability information. Okay. What else does the application or the risk selection process go through? Fair Credit Reporting Act guarantees applicants to rights, guarantees applicants right to information by any agency. Okay. Fair crediting. Insurance, what should I know? Factors in computing premiums. What all goes into computing a premium? Mortality, the number of deaths by age groups, investment experience, the interest the company receives on company's investments for itself, cost of doing business, operating expenses, salaries, rent, equipment, maintenance, taxes, all that stuff, operating expenses. These are all things that's factored into a premium, right? Computing premiums. Contribution to surplus, a portion of profit, which is held as reserve money to cover insurance claims. It's so obnoxious, but we just want to remember those terms. Mortality deals with the deaths of age groups, right? Investment experience, the interest the company receives from companies' investments, right? Cost of doing business, that's simple. Cost of doing business, the amount of money that it costs to operate a business. Contribution to surplus, the portion of profit which is held in reserve money to pay insurance. Okay, you're going to remember this when you see it. Net premium versus gross premium. Net, gross, come on now. Those of you that work, you get your paycheck. What you get is your net. What you made is your gross. The gross is bigger than the net. Wouldn't it be lovely if we can get the gross instead of the net? Net premium versus gross premium. Gross premium includes mortality rate, assumed interest rate, and operating expenses, right? Net premium is gross premium without operating expenses. So your gross, something is taken away, leaving you with the net on your paycheck, right? So the gross premium has operating expenses. The net premium does not. That was so simple. You are going to remember that. You're going to remember that. I know you're going to remember it. Insurance. What should I know? Insurance marketing system. Independent agency. Independent. Probably dealing with one single somewhere in there. Let's see. Agents represent several agencies. Agents represent several insurance companies simultaneously. I was wrong. Independent agency system. Agents represent several insurance companies simultaneously. That's what an independent agency system. Independent agency system represents several companies simultaneously. Captive or exclusive. Here we go. Captive or exclusive agency system appointed by one company and represents only that one company. Captive, exclusive. Okay, exclusive. General agency system. General agency system, independent, what represents several companies simultaneously. Captive or exclusive represents one company and that company only. General agency system, same as captive. What is same as captive? Well, captive was a company that represents only that company. Well, general agency is same as captive, and are often paid an allowance to cover office expense and staffing, earned commissions on personal sales, and overrides made by the agents on their team. General agency system. Managerial system. Managerial. We're going to remember that. Managerial is just saying that not only do they get permission, they get salary too. Managerial system, okay? Direct response. Direct response. Clients submit application via mail, internet, bypasses the agent altogether. Direct response. What does that mean? They don't need me as the agent. They go straight through the internet or through the mail. Other financial institutions. Other financial banks, credit unions. Banks, credit unions, and others now market insurance as part of their business, either on commission or salary base. So we're gonna wrap up this session with traditional life policies, which are term life, whole life, joint life, survivalship life, modified life, graded premium life. The first type of insurance policy that was invented has one benefit, only death benefit. It is called term insurance. Term insurance is life insurance in its purest form. Term insurance is life insurance in its purest form. Does not build cash value, has death benefit only. We die, they pay. We don't die, they don't pay. That's the purpose of insurance. We die, they pay. We don't die, they don't pay. Quite often on the exam, a candidate for term insurance is someone who is in school with little money, but lots of responsibilities, such as a spouse and children. That is on the exam. That is on the exam. A candidate for term insurance is someone who is in school with little money, but has lots of responsibilities like a spouse and a child. You are going to remember that. Insurance, what should I know? Other term life concepts include convertible term, a term policy that can be converted to a permanent or whole life. Permanent and whole life are used interchangeably. You may see permanent policy, you may see whole life policy. They both mean the same thing. With no health questions, that policy can convert from a term to permanent with no health questions asked by the current or attained age. The number of years of a convertible term policy varies from company to company. What is a convertible term? A term policy that can be converted to a whole life policy. That's what convertible means, okay? No health questions asked. Renewable term. Renewable. What does that mean? A term policy that can be renewed at the end of the term with no health questions asked for a higher premium. That's what we have. Term. What does that mean? Renewable term, that means you can renew your policy at the end of your term without any health questions, no matter what type of diagnosis that you have received over the course of that term. They do not count against you. Renewable term, okay? Cash value policies. Cash value policy where premiums and coverage occur until age 100. The cash value is greatest at age 100. I am going to close on this page. At age 100, the cash value equals the coverage. At age 100, the cash value equals or endows equals the coverage, endows and ends the policy. Some people prefer the premiums paid up. So limited pay whole life was introduced. While keeping all the whole life features, whole life monthly premiums are smaller than limited pay or single premiums because payments are stretched all the way to age 100. Some people prefer the premiums paid up. So the limited pay option came into play, limited pay whole life. It was introduced. It keeps all the whole life features. But while the life monthly premiums are smaller, the limited pay are single premiums because the payments are stretched out over the course of 100 years. Limited pay can be called 10-year pay, 20-year pay, or paid up to 65. Okay. And the most drastic form of limited pay is single premium whole life. All right. This concludes this session of our study. Remember what we went over: renewable term, convertible term. Think about that. I'm not going to go over the information again. Renewable term, convertible term. You think about what that means. Okay. The first type of insurance that came out, it had one benefit. What was that benefit? Term insurance in its purest form does not build cash value. It has a death benefit. Death benefit only. We die, they blank. We don't die, they blank. Quite often on the exam, a candidate for term insurance is someone who is blank with little blank, but lots of responsibilities, such as blank and blank. Think about it. Traditional life policies, term life, whole life, joint life, survivorship life, modified life, graded premium, all of this coming up in our next session. Recapping, right? Independent agency represents several insurance companies, right? Simultaneously. Captive, appointed over one company only. General agency, this company is captive, but it's paid an allowance for operating expenses and get overrides for agents on the team. Earn commission. Managerial, not only do they get commission, but they also get salary. Direct response system. What does that mean? Honey, they just bypass the agent. We're not needed in this case, right? Other financial institutions, it's just talking about banks and credit unions. They offer this as a part of their business, right? Mortality, investment experience, cost of doing business, contribution to surplus, net premium. We talk about all of that, net versus gross. Go meditate on that, okay? Insurance. What should I know? Risk selection process. What is the risk selection process? There are 4 processes that the risk selection goes through: underwriting, application, MIB or Medical Information Bureau, and the Fair Crediting Act. What about those 4 things? You go and study that. We talked about the agent's responsibility. Agent responsibility, remember that paperwork, contacting the beneficiaries, cooperating with representatives and other companies, helping the beneficiary choose a settlement option. Agent responsibilities. We talked about 3 types of authority: express, implied, apparent. What are those? What are the difference between express, implied, apparent? Go back and pause this after each thing that I say and go look it up and find out. Express, what is express? Implied, what is applied authority? Apparent, what is apparent authority? Insurance, what should I know? These are other contract terms: parole evidence, contract of utmost good faith, estoppel, conditional contract, mortality rate, effective agent. What are the effects of agent? What's going to happen to that insurance every year? Well, you're going to remember it. Aleatory, terms to let us know that insurance contracts are strange. Remember, aleatory? What does that mean? Contract adhesion, unilateral, unilateral. You know what that is. You're going to remember it. Legal, elements of a contract, elements of a legal contract. 4 things we talked about. Elements of a legal contract: competent party. You got to have a competent party. You got to have a legal purpose. You have an offer and acceptance, and you got to have consideration, and that's money. Elements of a legal contract: You got to have competent parties. You got to have a legal purpose. You got to have offer and acceptance, and you got to have consideration, which is money. Think about those 4 things. I'm just giving you a recap. We talked about authorized and unauthorized, admitted and non-admitted. We know what that is. Lawyers Association. We know that they underwrite each other's risk, but they are not insurance company. We ain't thinking about that. Lawyers Association, they underwrite risk. They are not an insurance company. We know this. Surplus line, $50,000 bond in the state of Alabama. Surplus line companies, brokers that are allowed to operate in Alabama with a $50,000 bond. Got to remember that. Ratings Association, you're going to see this. AM Best, Moody, Finch, and S&P. Oh, I remember that question when LaSheila was saying that. Reserve, amount of money set aside by law to pay future death claims. You're going to remember that. That's easy. Where is the insurance company's home office? Where is the insurance company home office? Well, that depends. It depends if it is domestic, foreign, or alien. What is the difference between those 3? Domestic, alien, foreign. You know that. I'm not even worried about it. You're going to know it. Types of insurance company. We talked about 3 types: stock, mutual, fraternal. Stock, mutual, fraternal. Companies own stock, owned by stockholders. Mutual, policyholder. Fraternal, their own members. That's easy. Needs for cash. There are going to be some needs for cash. Needs for cash. Needs for cash at death. Final expenses. Burial expenses. Medical bills. Debt. Current bills. Debt repayment. Credit cards. Car loans. Home assurance. Need to pay off a mortgage. Education fund. Emergency fund. See? These are things to remember. When there is a double household with a husband and a wife, when one person leaves, if both of those parties was bringing in income, that put the family in an immediate strain. So we need to remember the need for cash after our demise. I'm almost done with my wrap up. Life insurance, a way of spreading the costs from one person to many so that one won't be overwhelmed. Life insurance is based on an imaginary person that lives to age 100. The law of large number is the fact that you can study millions of deaths over decades and predict accurately about how many people would die within a certain age group. Law of large number. A life insurance policy does what? Creates an immediate estate upon death. The money immediately becomes real upon death. Y'all are going to pass this test. Dealing with risk. The world of insurance deals with one word. That word is risk. What is risk? The uncertainty of loss. The fact that something could go wrong at any time that's going to cost money. Insurance transfer the risk from one individual to a corporation or to an insurance company. Easy peasy. Dealing with risk in a large number. We talk about all of that. Alien, foreign. We talk about all of that. Study for the test. Preparation for the test. You are at Bishop State. You are getting ready to take your test. The clock just started. What do I need to think about? What do I need to remember? I need to remember to read each question at least 3 times. I need to remember to read all 4 answer choices before selecting the correct one. I need to watch out for words like not and except. I do not change an answer unless I saw it somewhere else or find it in another answer. If you are stumped on a question, do not stop, mark it, and move on to the next one. Use the process of elimination. Once again, that is the end of this study course and our recap. I want to thank everyone for chiming in, for coming and joining and being a part of Elshaddai's life team. And I give you a great big thank you on behalf of myself and my husband, Barry Jones Sr. And until next time.